Gold made some crazy moves this past week, and if you're looking for an easier way to analyze the gold market, then you are in the right place, because right now we are going to break down my game plan for the upcoming week, starting with the entries, the exits, and the profit targets potentially for this market for next week. So let's just go ahead and jump right into our analysis, starting on the weekly time frame. And as we can see, price made all new highs inside of the market this past week, pretty much ending up at 28.61 with a high of 28.86 inside of the market. I know last week I was thinking, could it really go higher? And yes, it did. So I was able to catch at least one move on this market this past week. It was really challenging, but I did catch one move. So hopefully you caught some moves as well based on last week's analysis. So if we look at all of this momentum here, we can see nothing but bullish momentum. This is actually very clean price action looking at this on the weekly time frame. So starting with this, let's go ahead and mark off the highest height inside of the market and make this level really slim. So all you got to do is go to the top of your chart on the weekly and then draw a box, because that's what I just did. I am building another community on School called the Consistent Profitable Traders. This is a group that is free to join. Basically, I envision having conversations about price action trading, and I do have some things in the classroom here. There will be more educational resources inside of the classroom very soon. And every month, I will have a monthly call where I'll answer questions that you may have about trading profitably. So go ahead and check out Consistent Profitable Traders on School. The link will be in the description box below. Let's go ahead and draw another level right about here. So aiming for the previous high inside of the market. So this level is sitting at about 27.91. So really close to 2,800 flat. And then let's go ahead and go down to the daily time frame so we can mark off some new levels here. Now we can see that this level lined up perfectly with that. Let's go ahead and draw some more levels. So the next level I want to draw is actually, let me do it like this, is around 27.34, and then I'm going to do another level a little bit lower than that, about 2,700 flat, and then I'm going to do one more level, mainly because we don't know what this market can do next week. So this level is at 26.58. So these are all my daily levels. I don't think I want to draw any more. Let's go ahead and go to H4 and then just take a look at our levels to see how things are lining up. So let me scoot all of this in. Okay, great. I actually do see some more levels that I want to draw. So really obvious to me, I do want to draw another level here on this H4 time frame right at 28.40. So that lines up perfectly with that. I think this is pretty good for what I want to do right now. So what I'm going to do is just go ahead and make sure that these levels are lined up. So this is the highest point in the market. So I'm just aligning my level to that. That's all. We just drew that. That looks good. This looks good. This looks good. Basically, I'm just looking to see that things are lining up with my levels. This, I do want to scoot it down just a little bit. So now this level is sitting at 26.95. And this level's looking great, and I'm not going further down than that. So far this is looking good on H4. Let's go to H2. All right, so here are our levels on the H2 time frame. There are some things that I could do to break up some of these levels, but I think I'm gonna wait until we go down to H1. So for right now, this is actually looking really great. The things are lining up here. We have a support. Here we have another support. Let me see. I probably do want to move this down just a little bit. So now this level is sitting at 27.32. This is on the H2 time frame. And then this level is sitting right on my line, or actually right at the bottom of my line. So I'm just going to scoot this down a little bit so that way my level is underneath this support. So this level is sitting at 26.93. And then the same with this level right here. So it may vary if you're using line versus boxes like I am, but it really doesn't matter. Just look at these as zones. They're not exact price points. So this right here is now sitting at 26.57, and that was the last level. So now let's go to the H1 time frame. Okay, So on the H1 time frame, what I want to do is I want to make sure that first of all that my levels are looking correct. So this looks good. We just adjusted that. This looks good. Now we have a lot more data here. I'm going to leave that alone. And then this also looks good. It's like I could scoot this down just a few pips. Let me do that just because I like it to look neat. So now this is sitting at 27.32. Didn't really move all that much, but I like the way it looks now. Same with this. I'm going to do that. This is sitting at 26.92. And then this is actually sitting perfectly. Okay, great. So that was the last level. So we have quite a few levels here on this chart. And the other thing that I want to do is I want to take some measurements. I want to make sure that these zones are tradable zones for me as a swing trader. I like really big zones, at least 100 pips. And this obviously looks like it is, but I just want to make sure. So this is 500 pips right here. So I definitely want to break this up just because it would be unrealistic for me in the way that I trade to hold this through 500 pips. If your trading plan allows for that, by all means, keep that on your chart. But for on my chart, I'm going to add another level right here. So this level is at 28, roughly 28.10. So I like this support right here. Price bounced off a few times. So now we got a nice clean level. I like that. 280 is a bit more manageable and realistic for me, especially because a lot of the trades that I take are typically 100, 200. I think the max I may have gotten in my recollection is about 250 pips. So that is something that works for me in my trading. So that looks good. I'm not going to mess with that because I have a plan for that, and we'll talk about that in a second. This, same thing. So let's go ahead and clean this up. 500, 600, almost 600 pips. Let's break this up a little bit. So I'm just doing this based on market structure. So I think I like this level right here. Okay, so I drew this level at 27.65, mainly because we have some resistance points through here. Resistance, we have a little support, and that broke through. That was clean, so that looks good to me. And I think this one may be another one that I may adjust. 420. That is a little big. If I foresee it coming down here, then I will draw another level. But however, we've already drawn quite a bit of levels right now, and I want to get into the analysis piece. So here is where price is currently sitting inside of the market. So one of the first things that I see, actually I'm going to use these horizontal rays. So the first thing I see is that support is forming around this level, pretty much around where price stopped for this upcoming week. So I'm just going to take my horizontal ray tool. Oops, wrong one. And change that. Okay, great. So here's my horizontal ray. This ray is sitting at 28.59. So I really like this level right there. And mainly what I would be looking for, since the market is obviously very bullish, I will only be looking for longs for the way that I trade. But a very short-term idea could be from this level all the way down to this key support, and this is 174 pips right there. So that's definitely a decent move. But one thing to pay attention to is when price gets to this zone, it could potentially look like it's going to continue down, but then pop back up, because that's what it did right here. So that's why I said I'm not really interested in shorts. I'm more so interested in longs because the price has been very bullish. Now, however, the fact that we have made higher highs inside of the market this week, that means that there is a possibility for price to reverse. But it doesn't mean that I'm just going to take the first shorting opportunity that I see. And that first shorting opportunity I see would be here. I would want to see some clean break and market structure being formed below this level of 28.40. That's when I will be interested in a short position. If you are tired of missing out on gold, in this blueprint, you're going to get an easy to follow profitable gold trading table, as well as profitable entry levels and strategies. If you've tried to decode things like FOMC, geopolitical events, you may have tried without much success. And in this blueprint, you're also going to master simple strategies that the big players like banks and institutions follow, and then also be able to spot profitable opportunities so that way you could avoid some of the common traps that other traders fall into. And then, of course, you're going to save hours of research with a clear and actionable plan inside of the gold market. Just take a look at what some people are saying about this. So go ahead and grab your copy of the Profitable Gold Market Blueprint today. Looking for a piece of that correction, whatever that may be, if that does happen. So let me just go ahead and mark this off right here. So I will be looking for a short below here. This is an idea, but that would be too risky for me. Right here would work. That's a really nice move. And then of course coming down here, but more likely right here if price was to come down here, because even though today we did see a big push up, this candle alone is 197 pips. So that was a really big move, and then it just consolidated for the rest of the day. So like I said, looking for longs, and then let me make this a little bit bigger just to give more context of where I would actually enter. So we have consolidation here. I would want to enter above consolidation. So somewhere in here, and then this level is at 28.64. So to be a bit more conservative, above this wick at 20, this is at 28.65, so only 10 pips away, but more conservative. And then buys above here, basically targeting this previous high. That would be a trade idea that I would have. So right there, wow, that's 200 pips, amazing. So since we don't know what price could potentially do, there's more tariff talks inside of the news. So that could mean that price of gold could continue to move higher, which is insane, but this is the market we're in. So we got to trade what we see, not what we want. So using this Fibonacci retracement tool, this is what I like to use in order to figure out where price could potentially go, especially in the situation of all-time highs. So one of the things I would mark off would be this 27% level, and this is at 29.18. That would be a target, and then the next level for me would be the 61.8, and that is 29.58. So that would pretty much be ideas for where price could potentially move to as the market continues to figure out what it wants to do. Does it want to continue to push higher? And we have to look at it not just from a US perspective, but also from a worldwide perspective. So anyway, so this is my analysis for this upcoming week. If you enjoyed it, please give it a thumbs up, because a thumbs up and your positive comments really encourage me to continue making videos like this, mainly because I was just sharing with someone that I could probably make more money if I wasn't making these videos. So if you want me to make more videos, go ahead and let me know in the comment section below. And if you have made it this far, write fibs in the comments to let me know that you've made it this far. See you next time.